Well, let's now turn to the issue of housing affordability, or perhaps even more appropriately, housing unaffordability. So, researchers such as Yale, Dunn, and Nethercourt have really highlighted consistent evidence of a growing decline in housing affordability, particularly for the people in the bottom of 40% of their income who spend actually 30% of their earnings on housing, what we shall be referring to here as the 30-40 rules. So the reasons behind this decline are really complex, but include things such as the rising demand for housing due to urbanization and population growth in particular, but also investors pricing out first home buyers, often supported by favorable tax arrangements such as, the negative gearing and stuff like that, and also a reduced stock of public and social housing as we started considering in the previous recording. So all these factors really get to combine to create a market where ownership of housing is increasingly out of reach for many Australians, and renting is more and more becoming a long-term or even a permanent arrangement for lower and middle income earners. So some factors, of course, are again also influencing the housing market and housing and affordability in particular. Several structural and demographic factors. We can think here of movement through properties, life course transitions, which play a major role here, and people typically moving through different housing type. For several reasons, again, this can include, leaving the family home or buying a first property or upsizing when starting a new family or, downsizing later in life as empty nesters. So other factors include demographic change, such as a growing population, an aging population. We can think here of, the rise in multi-generational households, which also reshape housing demand. And lastly, the COVID-19 pandemic, which had also significant impact, of course, on housing. We saw, for example, a record of housing price growth and increasing in rent and a reduction in rental availability, especially during specific moments such as during the lockdowns. So lockdowns in particular has led to a population shift as people moved out of major cities and many people went to live in regional areas and, this in itself had resulted also in prices going high in these regional areas where actually houses used to be quite affordable compared to major cities. So COVID-19 actually had significant impact on, the housing market. Can you think of any other factors maybe you would like to add here and we can discuss about those in the tutorials? If you see any other factors, structural factors here maybe influencing housing market, yeah, let's discuss about those as well in the tutorial. And of course, again, this graph is just taken from the CoreLogic home value. The CoreLogic Home Value Index, which shows a sharp increase in cumulative home values during and immediately after the pandemic, from 2020, March 2020 to February 2022. You can see clearly how housing prices have dramatically increased in this period. And again, COVID-19 has been a big factor shaping that dynamic. Now, we might now want to speak about housing stress. And when we discuss housing stress, really, a general rule of thumb is that a household is considered to be in a housing stress if it spends more than 30% of its gross income on housing cost. Housing cost might include things such as rent for tenants, mortgage repayments, rates and taxes, insurance, repairs and maintenance, strata levies and loan repayment for alterations and so on and so forth. And again, this metric is a holistic sense of the financial burden really, that maintaining a home can place on a household. And that comes with lots of stress. And, we have started using this concept of housing crisis. And again, this can be another way of understanding the housing crisis. There is the 30-40 ratio, which we had started discussing about, or the 30-40 rule. And this is just really the commonly used benchmark for assessing affordability among households, affordability of housing. The 40 refers to households in the lowest 40% of the income distribution, those on low incomes more generally. Whereas the 30 refers to households spending more than 30% of their income on housing. So when low-income households spend this much on housing, they are considered actually to be in a housing stress because so little of their limited income is left for the other essential needs. By contrast, actually higher income households might spend also more than 30% of their income on housing, but the impact is far less because they still have enough remaining income to meet other necessities. So for this reason, the 30-40 rule just focuses on affordability pressures among those least able to absorb high housing cost rather than just looking at the numbers themselves, which can mean anything. So then the question is, who experiences housing stress? It's mostly really low-income earners who either purchase homes with a mortgage or rent privately. And these are really the people who tend to experience the most severe housing affordability pressures. It's also important to note that low income does not necessarily mean low wealth. Really need to be clear on the concept. When we say somebody is in the low income category, that doesn't mean necessarily that they are poor, but we are just thinking of what they are earning and where does that fall in the revenue or income calculations. And the largest group of low-income households are actually outright homeowners, often older Australians who own their homes but receive limited income, such as through pension. Again, this kind of tells you really what we are talking about when we speak about low income, and it doesn't mean necessarily the poor people. So we are thinking here of, these people who might be asset rich, but income poor. The other category of people who are affected by housing stress might include private renters, who form the next largest, category of low-income household. They really can face also the greatest vulnerability, as they typically have low assets and little tenure security of housing. We can also here think of those with mortgage, because also they get to face growing repayment burdens due to the rising interest, bank interest, and even the time it takes to finish paying a mortgage. Actually, it's not as simple as it might appear. And finally, we can think here of people in public or social housing who usually have lower housing cost, although again, this group is limited by the chronic shortage of available dwellings. So clearly different category of people who are affected, and we can think of other groups here, but these are the ones discussed by Dalton and Nethercourt, and you might want to see how this is framed really in the reading. So the current data, according to the Australian Institute of Health and Welfare, is indicating that between 2019 and 2020, actually 10.5% of Australians' households spent between 30% and 50% of their gross income on housing costs. And nearly 6% of households spent more than 50% of their income on housing. So these figures are kind of reminding us how housing has actually, the cost of housing has actually risen steadily since 2007 and continues to highlight the deepening housing affordability crisis in Australia. Thank you very much, and speak to you in the last recording.